Welcome to TheStreet.com TV. I'm Aaron Task here at the offices of Smart Financial Partners with Joe Capone, who's a managing member here and a contributor to RealMoney.com. Joe, welcome back.
Good to be here, thank you.
And thank you for having us in your house today. So we're focusing on the financials, and the big story this week in the financial space would be the bidding war for ABN Amro. Is it going to be Barclays? Is it going to be Royal Bank of Scotland? First of all, I guess if you're an ABN Amro shareholder, you got to love this because the bidding war is always good for that stock.
Absolutely. For ABN shareholders, this has been really a perfect situation. The company has underperformed for several years, but has some reasonable franchises around the world. And TCI, a major hedge fund in Britain, really highlighted the value of that. And luckily, ABN went into discussions with Barclays, and amazingly, a very aggressive consortium of 3 institutions is launching apparently a hostile bid. So really, for ABN shareholders, it couldn't get much better. In fact, I would say now at this point, it probably can't get much better. So maybe you should lighten up, or look at the next. Look at the next idea. There are plenty in following financial services companies for 16 years. There are plenty of underperforming banks.
Right. Well, we'll get to that in a second. But if you were to handicap it at this point, do you think Royal Bank and the consortium will win out? Do you think Barclays is going to up their bid to try to match or beat it? Where do you think this plays out?
I don't think Barclays can up its bid substantially. It's all in stock. I think it's a fairly rich price for Barclays to pay anyway.
Right, $91 billion is what they pay.
Yeah, it's fairly rich for them. Let's not forget ABN AMRO's market cap now is greater than that of Barclays. So really, for any ability to increase value for ABN shareholders, Barclays has to sell Wall Street on it being a better deal because it's stock, not cash. The consortium, I had thought had maybe a 1 in 4, 1 in 3 chance. Now I think it's 50-50 or maybe even in their favor. The key, or one of the keys, is going to be LaSalle National Bank.
Right, so that's sort of the side deal within the ABN Barclays deal that LaSalle is going to be sold to Bank of America. How much of a knock would it be for Bank of America? Or would it be a good thing if they're not able to buy LaSalle? Because people say that Jim Cramer said they've become addicted to acquisitions.
Well, if you're addicted to acquisitions, and that's a strong statement, and Jim makes strong statements.
That's why he is where he is.
And I may agree with him, but I would take that a step further. If you're addicted to acquisitions and you take away one, the addict will find another.
Okay.
And that's one of the problems here, is that if you are a bidder at a high price for a bank and you lose, so let's say Bank of America does not buy LaSalle, that it is bought by the consortium or by Royal Bank of Scotland standalone, everyone on Wall Street knows that they would have paid $21 billion for LaSalle. Everyone's going to say, what are they going to buy now?
Oh, that's what I'm going to ask you. So what if they don't get LaSalle? Like, who else is out there has maybe a similar profile that Bank of America might take a run at?
LaSalle, Bank of America has had a long and checkered experience with Chicago. Legacy Bank of America, that's before the Nations Bank merger, right. So not Ken
when they were
Lewis
San Francisco Bank,
correct.
Bank of America, right?
They bought Continental Bank, which was a remnant of a famous Continental failure in the mid-'80s. They bought that company in 1994. It was a wholesale bank only, but they didn't do a lot with it. It didn't really work well for them. In '96, they tried this fairly aggressive in-store branch strategy for retail banking with Jewel Osco, and they opened up 100 stores. Then 2 years later, sold it to TCF. And then in 2003, they announced a de novo branch effort, and I believe they've built around 50 branches over the last 4 years. But in Chicago, that's not much.
Right, that's nothing. Yeah.
So Bank of America really needs Chicago. There's not a lot of large, pure plays left. I think Bank of America would have to go to another regional or look for something else. I've been saying, and I do believe in the next couple of years, it wouldn't shock me if Bank of America were to look at Countrywide Financial. Not tomorrow, okay. Let's not buy the calls, the short-dated calls on it. But I think they're underweight in mortgages, which has hurt them in the past, helping them now.
Now might be a good opportunity since mortgages have been suffering.
When it starts to turn, I mean, I think like anyone, you don't want to be buying when everyone is selling. I think they would like to catch the inflection point. Angelo Mozillo signed on at Countrywide until 2009. I think 2009 may be a time where they could look at a deal like that. So no, I wouldn't be chasing regional banks on what B of A is going to buy. That's a needle in a haystack argument anyway. There's just too many of them. But that said, I do think that if B of A, even if they don't get the deal, now we know they need more acquisitions.
Okay, so you mentioned at the top you think that there are some possible opportunities, some underperforming financials. Where do you see opportunity here from the long side?
On the long side, I mean, I think there's really a number of them. We've talked about Citigroup many times. I mean, that won't be acquired like ABN is.
That would
sure.
be a pretty big deal if it were.
Yeah, that would be a big deal. I mean, we're seeing M&T having tripped up a little bit. Ironically, and this is intensely speculative, but just to throw this out there, if the consortium doesn't win, what is Royal Bank of Scotland going to do? Allied Irish Bank still has a big stake in M&T. M&T's branches also overlap very favorably with Royal Bank of Scotland's branches. They own Citizens Financial in the United States. People may not know that, but Royal Bank is a major player in New England. M&T is a nice player in the Middle Atlantic, recently tripped up on Alt-A mortgages. Allied Irish or M&T could be targets for Royal Bank of Scotland at some point. So there really are. I mean, there's a host of opportunities. I think Key has obviously been tripped up for years.
Hurt, sure.
I mean, there are a lot of companies you can look at that are bouncing along the bottom that I think are fairly interesting. Countrywide, is one I think is going to be a winner. They're performing very well, but
even though they gave some soft guidance.
Sure, this is a horrible quarter. I mean, if you're in the mortgage business in the first quarter of 2007, it's going to be a pretty poor quarter.
Pretty, right.
So that wasn't shocking. Their new guidance is $3.50 to $4.30 per share. Stock's trading around 36. If they make the low end of that guidance, when a company trades at 10 times earnings in a trough environment, you're not going to get very hurt in a situation like that.
All right, Joe, thanks very much.
You're welcome.
My guest has been Joe Capone. He's managing member of Smart Financial Partners. I'm Aaron Task. Stay tuned for more of TheStreet.com TV.